All right, so let's dive into Angel One today.
Sounds good.
You know that Indian financial services company? Doing some pretty interesting things.
Definitely.
You sent over their Q3 2025 financials, the announcement about their new CEO, and that investor presentation
Right.
outlining their growth strategy. Seems like a lot to unpack.
Yeah, there's a lot there.
But don't worry, that's why we're here.
Yeah, to break it all down.
Yeah, break it all down, give some insights to the listeners.
Exactly.
So first of all, let's start with the big news.
Okay.
This dividend announcement.
Yeah.
A first interim dividend of 11 rupees per equity share,
Quite generous.
payable to those registered as shareholders by January 21st, 2025. Not a bad way to start the year off, right?
Not at all. No.
What's the story behind that kind of confidence?
Well, I mean, their financial reports
All right.
really paint a rosy picture.
Okay.
Both the consolidated and the standalone financials show strong profit growth,
Uh-huh.
increased revenue,
Okay.
expanding market share,
Oh.
all cylinders firing.
So let's get into the nitty-gritty.
Okay.
What are some highlights from the numbers?
Sure. So their consolidated net profit
Okay.
for the 9 months ending December 31st, 2024,
Okay.
was a whopping 9,975.60 million rupees.
Wow.
That's a huge jump compared to the same period last year,
Yeah.
standalone net profit.
Sure.
For that same period, even higher, 10,356.88 million rupees.
Okay, so even better.
Yeah. And plus, their debt-to-equity ratio has improved in that same time frame compared to the last full year.
Wow.
Clearly doing something right.
Those numbers are pretty impressive.
Yeah.
What really caught my eye was that chart showing their trading volume growth
Okay.
over the past 17 years has been steadily increasing, even during market dips.
Yeah.
How are they kind of defying the odds like that?
That's the million-dollar question, isn't it?
Yeah.
It seems to be a combination of factors.
Okay.
Their focus on attracting young, first-time investors, especially those outside the major cities.
So reaching beyond the typical investor.
Yeah, exactly.
Okay.
And they've also made investing incredibly accessible through their digital platform.
Okay, we'll get into that a little bit later.
Yeah.
But just on a high level right now,
Sure.
smart targeting, user-friendly platform. Got it.
Sounds about right.
Let's talk about the new CEO, Ambarish Kangas.
Okay.
His resume is pretty impressive.
Yeah, he's got quite the background.
Vice President and General Manager at Google Pay APAC,
Right.
Chief Product Officer at Mintra,
Yep.
and
That's right.
Strategy Consultant to Bain & Company, and an engineer at Cisco Systems.
And don't forget the 4 patents.
Oh, yeah?
Clearly, he's got the business acumen and the deep understanding of both technology and innovation.
That's a powerful combination to have.
Definitely.
Seems like Angel One is really gearing up for some serious changes with him at the helm.
Yeah, definitely a sign of what's to come.
So I'm curious, how does this new leadership fit into their long-term strategy?
Well, so their investor presentation lays out a vision they're calling Building a Holistic Financial Services Play.
Okay.
So essentially, they want to be the one-stop shop for all their clients' financial needs, not just a brokerage firm.
Sounds ambitious.
Definitely.
How are they planning to pull that off?
So they've outlined a few key growth pillars.
Okay.
First, they're launching their own asset management company.
Okay.
And here's the interesting part.
Okay.
They're focusing on passive investing.
Okay.
Index funds and ETFs are going to be their bread and butter, tapping into a growing trend in India where more and more people are looking for simple, low-cost investment options.
Makes sense.
Yeah.
Passive investing's gaining a lot of traction globally.
For sure.
All right.
They're also diving headfirst into wealth management,
Okay.
aiming to attract India's high net worth individuals,
Interesting.
a segment that's surprisingly underserved.
Okay.
Think personalized wealth management solutions tailored to their specific needs.
So going after the everyday investor with passive investing.
Yeah.
And then targeting those,
Yeah.
the bigger fish.
Whales.
Yeah, the whales with that customized approach.
Exactly.
Interesting.
And don't forget, they're
Yeah.
also aggressively diversifying their revenue streams beyond just broking.
Okay.
They're moving into distributing mutual funds, insurance, credit products, fixed income products, basically.
Wow.
Anything their clients might need to manage their finances.
Yeah, so they're really creating an ecosystem
Exactly.
for themselves.
Yeah.
Oh. But let's step back for a second.
Sure.
Talk about their existing business model.
Okay.
What's working so well for them already?
So one of their biggest strengths
Okay.
is their ability to acquire and retain customers,
Okay.
especially young first-time investors from those tier 2 and 3 cities that we mentioned earlier.
Yeah, they're really good at that.
Yeah.
So reaching beyond the major metros,
Yeah.
tapping into a whole new generation of investors. How are they connecting with this demographic that traditional financial institutions have often overlooked?
Yeah, it seems like they've cracked the code on a few levels.
Okay.
First, their digital platform is incredibly user-friendly, makes investing easy and intuitive even for someone who's never traded before. They've also been very strategic in their marketing,
Yeah.
targeting their messages towards those younger demographics,
Okay.
particularly in those tier 2 and 3 cities.
Okay.
So it's not just about having a digital presence, it's about making that presence really work for them.
Yeah, making investing accessible geographically and in terms of ease of use.
Yeah, absolutely.
But accessibility is only part of the equation, right?
It is.
Are they actually able to keep these customers engaged?
Absolutely. So their client cohort analysis shows that their customers stay active and profitable over time.
So they're not just jumping in and out,
No, no, no.
doing one trade and disappearing.
Exactly.
They're sticking around, building their portfolios.
Whoa.
So it really speaks volumes to their approach.
Yeah,
Okay, so they're attracting new investors, keeping them engaged. That's pretty impressive.
definitely.
Is it just the technology?
It's definitely a key factor,
Yeah.
but they also analyze customer behavior to personalize the user experience. They're constantly tweaking their platform and offerings based on what their customers actually need and want.
Smart. But, one number that really jumped out at me.
Yeah.
The average age of their clients is 29.
Yeah, that's pretty impressive.
Yeah.
Talk about capturing the future market.
Yeah, like what are the industry averages even? Like 40?
Yeah, at least.
Yeah.
It's clear that they're resonating with a generation that's comfortable with technology and eager to take control of their finances.
Yeah, that's really smart.
Yeah,
Okay, so they're attracting a new generation of investors.
they are.
Their trading volumes are consistently growing,
Yep.
and they're expanding their offerings to cater to a wider range of financial needs. So is there anything they're not doing right?
Well, no business is perfect.
True.
But what's interesting is how transparent they are about the challenges they face.
Okay.
For instance, they acknowledge that their EBITDA margins,
Yeah.
that's earnings before interest, taxes, depreciation, and amortization,
Right.
were impacted in certain quarters by their sponsorship of the Indian Premier League.
Oh, yeah, they were one of the major sponsors.
They were.
That must have been a significant expense.
It was.
Yeah.
But, they also pointed out that it significantly increased their brand visibility, particularly among their target demographic.
Yeah.
So it was a calculated risk that seems to have paid off in terms of brand awareness.
Yeah, you can't make an omelet without breaking a few eggs, right?
Exactly. But the key takeaway here
Yeah.
is that even with those costs, their overall financial performance remains strong.
Okay, so they're making strategic investments,
Yeah,
even if they impact their margins in the short term.
exactly.
But I'm curious about their CSR initiatives. The programs focused on skilling and job placement for young people.
Right.
It seems kind of unusual for a financial services company to be so involved in social empowerment.
It does seem a bit out of the ordinary, doesn't it?
Yeah.
But they're actually very strategic about it.
Yeah.
They're focusing on training young people in skills that are in high demand in the Indian economy, like, for instance,
Right.
electric vehicle servicing,
Yeah.
digital marketing.
So it's very current.
Very current, yeah.
Yeah, so they're not just writing checks.
Yeah.
They're really actively trying to equip young people with
Exactly.
the skills they need to succeed.
Exactly. It's not just altruism.
Right.
By investing in the workforce of the future, they're also helping to create a more prosperous and stable economy.
Right. Which
Ultimately benefits their business in the long run. It's a win-win.
benefits everyone.
Exactly.
Okay, so we've covered their financials, their new CEO, their long-term strategy, and their impressive customer acquisition and retention. What else is there to unpack in this first part of our deep dive?
Well, let's talk about that proposed group restructuring.
Yep.
It's a fascinating move that really shows how committed they are
Okay.
to their long-term growth and diversification strategy.
Okay, I'm all ears. Tell me
Yeah.
more about this restructuring. What's the plan?
Essentially, they're creating a holding company structure
Okay.
with specialized subsidiaries for their different business lines.
Okay.
So they'll have separate subsidiaries for their assisted broking business, their direct-to-consumer platform,
Right.
their asset management company, their wealth management division, and even a subsidiary dedicated to insurance distribution.
Wow, that's a lot of subsidiaries.
It is.
Sounds pretty complex.
It is a bit complex, yeah.
But what's the rationale behind this move?
Well, it's all about creating more focused and agile business units.
Okay.
By separating these different operations,
Yeah.
they can allocate resources more efficiently. tailor their strategies to specific market segments and foster a more responsive organization overall.
So breaking down a large monolithic structure into
Yeah.
smaller, more nimble teams.
Exactly.
But how will this restructuring actually impact their day-to-day operations?
So the holding company will
Yeah.
handle core functions like technology and product development, data analytics, facilities management, lead generation, and other shared services.
Okay. So
This creates synergies and streamlines operations across all the subsidiaries.
they're trying to reduce duplication of effort and maximize efficiency,
Exactly.
leverage their strengths,
Yeah.
eliminate redundancies.
Absolutely.
That makes sense.
Yeah.
But will this restructuring affect their financials or their dividend policy?
Well, they've been very clear in emphasizing
Right.
that this restructuring won't change their consolidated financials or their dividend policy,
Okay.
which should reassure investors.
Yeah, that makes sense. I'm still trying to wrap my head around how this will impact different teams. Like you said, it's a big change.
It is a big change, but they're framing it as a way to empower their individual teams to innovate and excel in their respective fields by freeing them from administrative tasks and allowing them to focus on their specific growth trajectories.
Okay.
They're creating a structure that's built for speed and adaptability.
Okay, I'm starting to see the logic here.
Yeah,
It sounds like a well-thought-out plan that could really position them
it does.
for sustainable growth
It does.
in the long run.
Absolutely.
Okay.
It's just another example of how Angel One is thinking ahead and making strategic moves to solidify its position as a leader in the Indian fintech market.
It's clear that they're not resting on their laurels.
No, not at all.
They're actively shaping their future, and it's exciting to see
Definitely.
what they'll achieve.
For sure.
But we've covered a lot of ground already in this first part of our deep dive.
Yeah, we have.
Before we move on, what's one key takeaway you think our listeners should remember from this part of the conversation?
I think the key takeaway here is that Angel One is much more than just a trading platform.
Yep.
They're building an entire ecosystem designed to meet the evolving financial needs of India's growing investor base, and they're laser focused on engaging the next generation.
Yeah, they're doing a really good job of that.
They are.
Okay, well said.
Thank you.
Now let's take a break.
Sounds good.
And come back for part 2, where we'll delve into their impressive track record of client acquisition.
Okay.
And how they're winning over a whole new generation of investors.
Can't wait.
Me too.
Sounds good.
Welcome back. So we've established that Angel One has, a pretty bold vision for the future of finance in India.
Yeah, they're really shaking things up.
But before we go any deeper into that, I'm curious about how they're building their customer base.
Okay.
They seem to be attracting new clients.
Yeah.
At an impressive rate, especially among those younger demographics.
Right.
What's their secret sauce?
Well, their digital-first approach has definitely been a key driver of their success, particularly in attracting those younger, tech-savvy investors. Take a look at this chart.
Okay.
Comparing their incremental client base to the overall growth in Demat accounts in India.
Okay, wow.
Right.
Yeah, that's a steep upward trajectory.
Yeah.
They're leaving everybody else in the dust.
Exactly. Their client base is growing at a much faster rate than the overall market, which is pretty remarkable.
Yeah.
They've gone from capturing 11% of new Demat accounts in Q3 2023 to a whopping 23% in Q3 2025.
So they're not just riding the wave of market expansion,
Right.
they're outpacing it.
They're exceeding it, yeah.
Yeah.
It's pretty incredible.
But what's fueling this phenomenal growth? Is it simply about having a digital presence?
Well, I mean, it's definitely more than that. They've created a seamless, user-friendly experience that appeals to those new investors. So think intuitive navigation, easy-to-use trading tools, a clean, modern design. They're also constantly innovating, adding new features and functionalities to keep their platform cutting edge.
So it's about having a superior digital product that's both functional and appealing.
And easy to use. You know, it can't just be like a bunch of features slapped together. It's got to look good.
Yeah, exactly.
It's got to be functional. People got to want to use it.
Yeah.
It's got to be intuitive.
Exactly. But even with a great platform, you still need to get people in the door.
You do.
Right.
Right.
How are they attracting those new clients?
Well, their marketing strategy's been very effective.
Okay.
So they've targeted their message toward those younger demographics we discussed earlier, particularly those in Tier 2 and 3 cities who are eager to participate in the stock market but may feel intimidated by traditional brokerage firms.
Yeah, so they're making investing feel accessible and approachable, which is so important.
It is, yeah.
For those new to the market.
Absolutely.
But is it just about marketing?
Well, I mean, they're also leveraging the power of social media, building communities, and engaging with potential clients online. And let's not forget about their pricing model. It's incredibly competitive.
Yeah.
They offer low brokerage fees and a transparent fee structure, which is appealing to cost-conscious investors.
So they're kind of shaking up that traditional model of high brokerage fees.
Exactly.
But can they sustain that low-cost approach long term? What are, like, the potential risks of such aggressive pricing?
That's a valid concern. It's a delicate balancing act.
Yeah.
They need to keep prices attractive to clients, but also ensuring they can invest in their platform, expand their offerings, and maintain profitability.
Right, they can.
You know, it's got to be sustainable.
Yeah, they can't just
burn money.
Yeah, give it all away for free.
Right, exactly.
But so far, they seem to be managing it well.
Yeah, they seem to be doing a good job.
Yeah, adding value beyond just low prices, providing research reports, educational content, and personalized portfolio tracking tools.
Yeah, so it's not just about being a discount brokerage.
Right.
It's about offering a comprehensive suite of tools and resources to empower their clients.
Exactly, and they're doing a good job of that.
Yeah, I think so.
Let's dive a little bit deeper into their client demographics. You mentioned earlier they're attracting a younger generation of investors.
Right.
So how young are we talking here?
So their average client age is just 29.
Wow.
Which is significantly younger than the industry average.
Like by a lot.
By a lot, yeah.
Yeah.
And what's particularly interesting is over 88% of their new client additions in Q3 2025 came from Tier 2, 3, and beyond cities.
Okay, so they're really tapping into this vast, underserved market
Absolutely.
of young investors outside the major metropolitan areas.
Yeah, they're going where the growth is.
Yeah, which is a smart move.
It is.
Considering, like, the rapid growth and increasing affluence
Absolutely.
in those regions.
Yeah, they're really tapping into a powerful trend.
Yeah.
It's smart.
But are these young investors sticking around?
That's the key question. And the data suggests they are.
Okay.
So their client cohort analysis shows impressive retention rates.
Okay.
For instance, 54% of clients acquired in FY21 were still actively trading in FY24.
Wow. Okay, so those aren't.
And those cohorts are contributing significantly to their net broking income.
So they're not just fleeting relationships.
No, no, no.
They're building lasting connections with their clients.
They are.
And fostering their growth as investors.
Exactly. It's not just about getting them in the door. It's about keeping them engaged.
Yeah.
And helping them grow their wealth over time.
Exactly.
The long-term game.
Let's talk about another crucial aspect of their business model.
Okay.
Their ability to, like, successfully navigate regulatory changes and market volatility.
Right. That's often overlooked, but incredibly important in the financial services industry.
Yeah, absolutely.
Angel One has demonstrated a remarkable ability to adapt and thrive.
Okay.
Even when faced with external challenges.
You mentioned earlier their resilience during the implementation of those peak margin regulations.
Right.
Can you remind us what those are and why they were so challenging for the industry?
Sure, yeah. So peak margin regulations, which were rolled out in phases, were aimed at reducing leverage in the market.
Okay.
Essentially making it harder for traders to borrow money to amplify their bets.
Okay, got it.
A lot of analysts expected these rules to dampen trading activity.
Right.
But Angel One's trading volumes remained remarkably stable.
Interesting.
Even increasing in some periods.
Okay.
They even saw impressive growth in their F&O, that's futures and options segment during this time.
So instead of being hindered by these regulations, they actually seem to benefit.
Yeah, they actually seem to, like, thrive under these new conditions.
How's it possible?
Well, it suggests that they're attracting investors who are in it for the long haul, not just short-term speculation.
Right.
These are investors who are less reliant on leverage and more focused on building wealth over time.
Okay, that's a really insightful observation.
Thanks.
It speaks to the quality of their client base and their ability to, like, attract the right kind of investor.
I think so.
Yeah, but even with a strong risk management approach, no business is completely immune to market downturns.
True.
So how have they weathered periods of volatility?
Well, so their order volumes have actually increased
Okay.
in many instances when the market has corrected significantly.
Interesting.
Which is kind of counterintuitive, right?
That's like the opposite of what you'd expect.
Exactly, but it suggests they're attracting investors who are not easily spooked by short-term fluctuations.
Right, people who are in it for the long haul.
Exactly, people who are willing to ride out the dips and come out stronger on the other side.
Yeah, that's a testament to their ability to build trust and confidence among their client base.
I think so.
But trust is also built on transparency.
It is.
So how transparent are they about the risks involved in investing?
They've been very upfront about the inherent risks of the market and the potential for losses. They also emphasize the importance of diversification and long-term investing as strategies to mitigate risk. And importantly, they've been very open about their own challenges.
You mentioned earlier how their sponsorship of the Indian Premier League impacted their EB margins.
Right, exactly. So they're not trying to hide their imperfections, which I think actually builds more trust in the long run.
Yeah, I agree. It makes them seem more human,
Relatable, real.
Yeah, exactly. Okay, so they've got a great track record of attracting and retaining clients. They're